Good afternoon, everyone, and welcome to this webinar from the UK Customs Academy and the Cosmetics, Toiletries and Perfumery Association, looking at importing and exporting cosmetic and personal care products in 2021. My name is William Barnes-Graham, and I am the Senior Content Editor at the Institute of Export and International Trade, and I will be your host for this afternoon. And we're looking forward to hearing lots from you during the webinar. So please do get in touch using the control panel throughout. Now, the end of the transition period is now truly looming upon us, and how we trade with the European Union is going to change, whether we reach a deal or not. Throughout all of this, proper planning and ensuring compliance with changing regulations and obligations is a must for effective and timely trade after the transition finishes. It's for this reason we're delighted to be partnering with the Cosmetic, Toiletry and Perfumery Association on today's webinar, and I'm delighted to welcome Francesca Rapola and Johanna Irigare from the CTPA today. Hi, Francesca and Johanna.
Hi, everyone.
Hi, everyone.
I hope I didn't butcher your second name there too much, Johanna. So great to have you both here today, and they were speaking alongside Kevin Shakespeare. Hi, Kevin.
Hello, good afternoon.
Kevin is one of the lead tutors on the Customs Academy and has been leading the Institute of Export and International Trade's training and analysis around the UK's future trading relationship with the EU, and is a regular speaker on our webinar programmes. But to begin with, if we move to the next slide, we will be running a few polls today, starting with this one. So the first poll is, how prepared do you feel for changes to trade with the EU at the end of a transition period? And the options there range from very prepared, quite prepared, not very prepared, not at all prepared, or not sure. And just a couple of housekeeping notes to get through that while that poll is ongoing. So first of all, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. And afterwards, you will be receiving today's slide pack and a recording of today's webinar. So do make sure to really listen in to what Francesca, Johanna, and Kevin have to say today. So I'll just leave it a few more seconds for people to answer the poll. Let's go 5 more seconds. It's going to close the poll now. And the results. So 45% are quite prepared, with 5% very prepared. So that's about a 50-50 split between prepared and not so. Those 15% they're not sure, but hopefully for those of you who don't feel as prepared, hopefully today's webinar will be of use. So if we move to the next slide now, it is, I'm delighted to be able to hand over to Johanna. So over to you, Johanna.
Thank you, William. Good afternoon, everyone. My name is Johanna, and I am the International Information Officer here at CTPA, working on the international regulatory and trade landscape. After the end of the transition period, the UK will become a third country to the EU, and the relationship will be the same as with any other international country and region, either through the terms of a free trade agreement or World Trade Organization rules, depending on the process of negotiations. So today, I am going to give you a brief overview of how to frame international legislation. Next slide, please. So when it comes to cosmetic products, each country has its own legislation text and competent authority. Some countries have more than one regulation that covers cosmetics and more than one competent authority as well. So it's important to be aware of all the regulations that cover cosmetic products. There are other regulations to also take into account, such as the VOC regulation in the US, Packaging and Waste in Korea, or the Industrial Chemical Act in Australia. So let's now go through the key principles around the cosmetic legislation and the international common practices. In terms of definition, it can vary between countries, so that a product classified as a cosmetic in one market, for example in the EU, may be considered as an over-the-counter drug product in another market, such as in the US. So it's important to know under which category your product may be classified, as it will define the requirement that will apply to it. The classification may depend on many aspects, such as the composition of the product, the claims, and the consumer perception. For responsible legal entity obligations, it is usually the manufacturer, the importer, or the brand owner. Sometimes there is the need to register with the competent authority or obtain a license before manufacturing or importing the product. There may be also the need to appoint a local agent for imported cosmetics to be liable for non-compliance as responsible for the product, including in terms of safety and labeling. In terms of ingredients, it is common for markets such as ASEAN in Asia to follow the scientific lead of the EU in the amendment to the annexes of the Cosmetic Product Regulation and incorporate similar amendments as part of the legislation, sometimes with a delay. Additional local restriction may also apply, which may act as a barrier to trade and limit innovation when importing product into a specific market. For good manufacturing practices, or GMP, the requirement depends on the classification of your product, whether it is a cosmetic or a drug, as the requirement for drug product are generally stricter than for cosmetic product. Some markets, such as Iran, require a GMP declaration to be issued by the competent authority or authorized industry body. In terms of documentation, some countries with in-market control systems will require a product information file, like we have in the EU, or equivalent. Other countries, where pre-market authorization or registration is required, may require a certificate of resale, a GMP certificate, or a certificate of conformity, as well as commercial documents. Sometimes there is also the need to notarize or legalize this document to prove their authenticity as well. In terms of labeling, there is the obvious difference in languages and translations needed on pack. Some countries also specify the location of the text on pack, the font sizes, or specific warnings to be added, for example, AHA warnings in the US, or additional information such as the registration number, which is a requirement in India. So it's difficult to create a global packaging, but there are solutions to the problem. For example, by creating a country-specific packaging or region-specific packaging, or over-labeling where possible. The claims requirements could also differ from the EU obligation with a less flexible approach, where country may issue a positive or negative list of claims rather than the criteria. For example, Japan has a positive list of permitted claims, and Canada has a negative list where unacceptable claims are listed. The process of product regularization may also change depending on the country and the product classification. So there may be a need to register with the competent authorities and getting approval before placing the product on the market. There also may be a need to certify the product and show compliance with the relevant standards before placing on the market. Or there may be the need to notify the product to inform the competent authorities, but this does not require approval. For serious undesirable effects, some countries, for example, Australia, have general consumer product reports, which also include cosmetics. Also, it's important to be aware that reporting timelines and obligations of responsible legal entities may also be different across countries. In terms of market surveillance, the key difference is between risk-based and hazard-based approaches in countries, which is reflected in the legislation with post-market surveillance and pre-market approval systems. So it's important to be aware of those differences, as this will have an impact on time and cost when planning to market in a specific country. Another important point is about trade and the impact of Brexit on trade agreements between the UK and other countries, as well as tariffs and customs. So as you may know, currently the UK benefits from the free trade agreement negotiated between the EU and third countries. However, after the end of the transition period, the UK will not benefit from this anymore. So the UK government is working with other countries to negotiate agreements, and CTPA is working closely with the Department for International Trade, engaging in discussions around free trade agreement negotiations for the benefit of the cosmetic industry, with countries such as the US, Australia, Japan, New Zealand, as well as the EU. Next slide, please. So when selling internationally, it is important to think ahead before developing your product in terms of manufacturing, including contract manufacturing, as free trade agreement negotiations and new requirements may have an impact on products. Labeling and advertising, the need for registration, certification, or notification, as carrying out testing, covering the necessary documentation, submitting the information, and waiting for the authority to respond can be a costly and lengthy process, and the changes in legislation that may have an impact on your product as well. Next slide, please. So to help you expand your business to international and keep you aware of current legislation and also latest development, CTPA has an amount of resources available for members on our website with our international online manual, which covers a series of countries with detailed information around the 10 key principles I just explained earlier, and also upcoming changes and trade data. We also have news items and new digests, which provide breaking news available for members, and our reference zone, which provide international references on specific topics. We also organize international webinars 4 times a year, and the recordings are available on our website for members. We have currently recordings available on a website for the US market, Australia and New Zealand markets, and we are planning to organize webinars on the Turkey and Chinese market this year. And finally, we support our member and provide expert advice as well as for specific countries in terms of ingredient restriction, labeling, market access, and so much more. Thanks everyone. I will let my colleague Francesca speak about the regulatory and compliance for cosmetic in EU and UK markets. Thank you.
Thank you very much, Joanna. Hi, everyone. I'm Francesca Rapolla. I'm Regulatory Affairs Manager at CTPA. So we're now going to talk through the regulatory requirements and how to continue to sell compliant cosmetic products in the EU and UK markets. So we can move to the next slide. So just brief introduction on the timelines for Brexit. So of course we know that the UK left the EU on 31st January 2020, and we're now in the transition period, which is going to end on the 31st December 2020. So from 1st January, there are 2 possible scenarios that we can identify, and we can see them in the decision tree on the next slide, please. So the UK and the EU are currently undergoing negotiations, and if these are progressing positively, there can be the opportunity for the EU and the UK to agree on a free trade agreement. And in this case, the EU and the UK will continue to trade under the terms of this free trade agreement. And there will have to be specific UK and EU legislation to implement the terms of this free trade agreement. However, should negotiations not be successful and a free trade agreement not be agreed, then the EU and the UK would continue to trade under WTO rules or World Trade Organization rules as of 1st January 2021. We're still going to have UK legislation in place. Of course, it will not reflect some of the terms of the negotiations, and EU law will continue to apply to the EU. So neither of the scenario is sure until the negotiations are concluded, and we are expecting negotiations to finish around the middle of October, when there is another EU Council, and we should have a better idea about the likelihood of one or the other scenario later on in the year. Next slide, please. However, while negotiations give us some uncertainty, there are quite a lot of things that we are actually sure of, and companies really have to take action now that we are still in the transition period to be ready to continue to sell products in both the UK and the EU market from 1st January 2021. And here is the list of what we are sure of. So first of all, EU law will continue to be applicable in the EU. as is currently the case. Therefore, to continue to sell to the EU market, there will be no change in that sense. And we know from all technical notices that were issued by the EU Commission that compliance is expected from 1st January 2021. So really, this transition period where we are currently, it's your time to prepare to continue to sell to the EU market. On the other side, we've got EU law that will become applicable from 1st January 2021. And the law is published. It's not yet the final version, but we know that it's not expected to change in the coming months. Therefore, we also know from a cosmetics regulation point of view what the UK obligations will be. Therefore, again, companies here can really start acting now to prepare to continue to sell to the UK market. And then I know Northern Ireland is quite a difficult topic for everyone. And there is a lot of confusion on the requirements for Northern Ireland. However, within the withdrawal agreement, which is the agreement under which the UK left the EU, there is a Northern Ireland protocol that gives the provisions and the terms under which trade will be carried out for Northern Ireland. So we know that, we also know how Northern Ireland trade will operate from 1st January 2021. Next slide, please. So we start looking at continuing to comply with the EU regulation to continue to sell to the EU market. And we really have to act now because EU regulation is not going to change. So currently, and it will be in place in the future, we've got the EU cosmetics regulation, which will continue to apply to all the other EU27 member states. And the table here really gives you a checklist of all the main topics that you need to look at and which changes you need to do to continue to sell to the EU market. So first of all, you need to have an EU-based responsible person. So the responsible person is the legal entity that ensures every cosmetic product placed on the EU market complies with the cosmetics regulation. And you can do this by either opening an EU-based office, or maybe you can contract a third-party company that provides RP services, or maybe you can appoint one of the importers in the EU market. But you must have an EU-based RP as a legal entity responsible for compliance with the cosmetics regulation. And then under the cosmetics regulation, we've got the obligation to label the name and address of the EU responsible person. Therefore, you also need to update the product label by putting that name and address of that new EU-based responsible person. And we really need to think that there is no grace period for updating the label, because the EU Commission was very clear that from 1st January 2021, the labels must be compliant and must have the name and address of the EU responsible person. And something else that you might have to update on the label is the country of origin. So currently, the country of origin must be labeled only for imported products. So far, the UK was part of the EU, so there was free movement of goods, and there was no need to label made in the UK if the product was coming from the UK. However, the UK is now a third country to the EU, so if the product is made in the UK, this must be stated on the label. Something else is about the notification obligation. So all cosmetic products must be notified on the CPMP, the Cosmetic Products Notification Portal. So once you have that new EU RP located in one of the member states, you must open a CPMP account with that new EU RP, and then you have to transfer all the current notifications under that new RP account. And something else that you really have to consider is the translation requirement, because of course, if your new responsible person is located in a member state that doesn't accept English, any documents in English, then you might have to translate your product information file, your safety assessment. And something else that is really important is about checking the safety assessor qualifications are accepted in that member state where the new RP is located. And you can do this by contacting the competent authorities of that member state and check that the qualifications are recognized as equivalent. And something that is quite complicated but really important is that so far we've had free movement of goods between the UK and the EU. So companies bringing products from the UK into the EU market are classed as distributors, and they have specific obligations under the cosmetics regulation. From 1st January, these companies will not be classed as distributors, but they will be classed as importers, because they will bring products into the EU market from outside of the EU. Therefore, their role and obligations, especially, will change. So you really need to be aware of what these obligations are. Next slide, please. And what is going to happen in the UK? So as I mentioned earlier, we know that UK law for the cosmetics regulation is being published. It's not yet its final version, but we do have a legal text to refer to. And this legal text is Schedule 34 of the Product Safety and Metrology Statutory Instrument. And how do we know how this is? So all EU law has been transposed into UK law as part of the EU Withdrawal Act. Therefore, the new UK cosmetics regulation really mirrors the EU cosmetics regulation. So in terms of all requirements, for example, for having a responsible person, the labeling requirements, the safety requirements, claims requirements, everything mirrors what EU law is. So we know that the cosmetics regulation actually looks exactly like that, and there is a full duplication of requirements for the UK. Next slide, please. So if we think about the actions that we need to take to prepare for 1st January 2021, and we can really do now because we know these requirements will actually come into force on 1st January 2021. In the similar way we've seen for the EU, we will need to have a UK-based responsible person. And again, companies can do this by either opening a UK-based office or contracting a UK-based third-party RP service provider, or you can appoint one of the importers in the UK. In the same way, the label has to be updated with the name and address of this new UK-based responsible person. And here we see a first point of difference between the UK and the EU, because UK authorities have given a 2 years grace period to label the name and address of the UK-based responsible person. It doesn't mean you don't have to have a UK-based responsible person. You must have that, but you have 2 years to add these details on the label. And it's the same for the country of origin. So if your product is made in any of the EU member states, then you will have to label that on the product. The UK will have its own notification database. So we can see that the notification requirements have been duplicated as well. So the new UK notification database will launch on 1st January 2021, which is the same date when the UK cosmetics regulation will come into force. And you're going to have 90 days from that date to notify under the UK notification database all your current EU notifications. And we've got a lot of guidance on that on our website, but what you basically have to do is download the XML files from your CPMP notifications and then be ready to upload them on the UK notifications from 1st January 2021. Again, if you don't have a UK ERP at the moment, but it's based in another member state and you want to open that UK ERP, you will have to translate the product information file in English because UK authorities will accept English, and it's the same for safety assessments. And again, you might want to check whether the safety assessor qualifications will be recognized by UK authorities as equivalent. And as we have discussed for the EU, again, we're going to see a change of roles and responsibilities for current distributors. So companies currently bringing cosmetic products into the UK market directly from the EU, they will become importers and they will have different obligations. So we know that all these requirements are not going to change. Therefore, companies really have to act now to prepare for 1st January 2021. We know that some of the requirements under the UK cosmetics regulation will depend on the outcome of the negotiations. And these are mainly about cosmetovigilance, so post-market surveillance, and how UK authorities will cooperate with the EU authorities to controlling products on the market, and also how ingredients will be managed, because we don't know if there will be cooperation between the EU SCCS, so the current body looking at evaluating the safety of ingredients, and how that would work in the UK. Next slide, please. So ultimately, companies that are seeking to sell to both the UK and the EU really have to duplicate both the requirements, so have an EU RP, have a UK RP, and everything else. So it's really a full duplication of all requirements, and compliance is mandatory in both areas. Next slide, please. And this is something just to recall about the distributor versus importer concept that we have just talked about from both a UK and EU point of view. So as we've seen currently, before 1st January 2020, apologies, the UK was part of the single market and the customs union, so there was free movement of goods. And an EU brand owner could supply a UK salon or any other type of distributor because there was free movement of goods. So what is going to happen from 1st January 2021? An EU-based brand owner can still supply those goods to UK salons or any other retailer, for example, but that salon is going to be an importer. And under the cosmetics regulation, importers are automatically considered the responsible person. So this salon will have intellectual property obligation, will have to ensure compliance of that product under the UK cosmetics regulation. And this is not really feasible for them to do that because they don't have access to the product information file, to the formulation, to the notification, because this is all intellectual property of the brand owner. So if we click the slide again, we can see the animation, and we can see that the best way for this to happen is for the brand owner to have a UK-based responsible person, and that responsible person can then liaise with that UK salon, who would become a distributor again and not an importer, therefore maintain its current role and responsibilities. And this works exactly the other way around, where we've got a UK-based brand owner supplying an EU-based salon or retailer. Next slide, please. And we're now going to talk about REACH, which is the chemicals legislation. So raw materials and ingredients within cosmetic products apply under EU REACH. So currently the UK has been part of the EU, and it was part of the EU REACH compliance. It's been contributing to registering chemicals under EU REACH. And we know that from 1st January 2021, EU REACH will continue to apply, as is currently the case, to all the other EU27 member states. So not many changes from an EU point of view, but if you are a UK-based company and you want to continue to sell to the EU, then you either have to appoint again an EU-based legal entity or transfer your registration to an affiliate that you may have, or any other third party that you collaborate with. As we have seen with the cosmetics regulation, also REACH regulation was transposed into UK law as part of the EU Withdrawal Act. Therefore, we're going to have a replica of the chemicals legislation into the UK, and it's more widely known as UK REACH. So again, UK REACH is retained EU law, and the requirements really mirror the same as those of the EU. So we're going to have registration requirements for the UK, authorization requirements for the UK. However, whilst we know what the requirements for new chemicals are, the transitional requirements are really depending on the negotiations. Because, for example, from a CTPA point of view, we work a lot with the UK government. In this case, for REACH, we work with the Department for the Environment, Food and Rural Affairs, and we are supporting them on the negotiations to try and agree on a sort of agreement for chemicals, in order to avoid full duplication of requirements for existing chemicals, so chemicals that are already registered under EU REACH. However, we don't know if these negotiations will be successful, so you really need to start thinking now what you're going to do should those negotiations not be successful. And what we really advise companies to do is to map their supply chain, understand which chemicals are coming from the UK going into the EU, the other way around from the EU going into the UK, understand the tonnage, because at the moment EU and UK tonnage have been put together as part of a single REACH framework. However, from 1st January, you need to consider the tonnage bands separately, one for the UK and one for the EU. So you really need to understand which chemicals might be affected and might be subject to new responsibilities under UK REACH. And you can also check with your suppliers whether they have some plans to maybe register themselves under UK REACH or transfer that notification under EU REACH. So you really need to have this supply chain conversation and understand which chemicals will be impacted. And at CTPA, we've got a lot of information on this. We ran a webinar on UK REACH specifically, and you can access that recording from the slides when you're going to receive them. Next slide, please. So this is really just a checklist to ensure you've got your own checklist and to check everything you need to do to continue to sell to the UK and the EU and ensure that you are compliant with both markets regulations. Next slide, please. And now, just briefly on the Northern Ireland Protocol regulation point of view. So as we said, the Northern Ireland Protocol is clear under the withdrawal agreement. So we know what is going to be applicable in Northern Ireland from a regulatory point of view. So under the Northern Ireland Protocol, it's written that EU laws that are included in Annex 2 of the Northern Ireland Protocol will continue to apply in Northern Ireland. And regulations that are applicable to cosmetic products are in that Annex 2 of the Northern Ireland Protocol. So Northern Ireland for cosmetics will follow the EU cosmetics regulation, EU REACH. So if you're selling in Northern Ireland, those are the regulations you have to comply with. And the same if you are selling in Northern Ireland and the Republic of Ireland, because the latter, of course, is part of the EU. If you only sell in Great Britain, then you only have to comply with the UK cosmetics regulation and UK REACH. But then if you sell in Northern Ireland and Great Britain, that's where you have the double compliance that is needed. So your product will have to comply with both EU regulations and UK regulations. So you really need to look at where you're selling your product and which actions you need to take to prepare to comply with one regulation or the other. And we know this is not going to change because these are the terms that, under which the UK left the EU. And currently negotiations for Northern Ireland mainly cover how the Northern Irish and British authorities will cooperate going forward. Next slide, please. And just a brief word on e-commerce, because of course products sold online, whether that is your own brand website or any retail platform, they also have to comply with the regulations, both the EU regulations and UK regulations. Next slide, please. And just briefly about CTPA work. So CTPA works with a lot of stakeholders, starting from the UK government departments, supporting them through the negotiations and shaping the future UK regulatory framework for cosmetics, but also with sister associations so that we can all feedback to the UK government and support from an EU point of view as well with the same message, and also to give specific advice to all our members so that companies can prepare and be ready for 1st January 2021. Next slide, please. And specifically for supporting members, we've got a lot of Brexit resources on our website. We've got a specific section that is called Brexit Advice for members. but we also provide a lot of one-to-one confidential meetings. So depending on your company's requirements, we help you understand which actions you have to take to prepare for 1st January. But then we issue a lot of updates and breaking news. We run webinars, events, we have reference zone on specific matters, and we also have fact sheets and position papers to try and make the understanding of this situation a bit easier. Next slide, please. We also have some Brexit public advice. Of course, it's not as detailed and thorough as the members' advice, but it has got enough information to also help you understand how to prepare for 1st January. And we can do ad hoc webinars that are also publicly available, like this one, but we cannot provide confidential one-to-one meetings or that level of information and help that is provided to our members. Next slide, please. And this is just a link of external resources as well from the UK government, the European Commission and the European Chemical Agency, because you can also find useful information here. And I'm concluded now, so I think I pass back to William.
Yes, thank you, Francesca and Johanna, for the presentations there. If we go into the next slide, I'm actually going to do a different poll now. I'm going to bring forwards a poll about RPs. So I'm just going to launch it now. The question is, have you set up a UK or EU RP to continue to sell to these markets respectively? And just while people are answering that poll, if you're still there, Francesca, I've got a couple of questions actually on RPs. So Niha, if I've said that correctly, has asked, does the safety assessment report need to have both EU and UK RP addresses if everything is the same?
Well, the safety assessment has to be made available in both addresses, the one in the UK and the one in the EU member state where your EU RP is located. It has to be made available in the sense that if competent authorities have to check something about a product or are carrying out an investigation, you have to be able to show it to competent authorities in that instance, for example. If you want, you can add the address of the responsible person in the actual report, and if it's the same, you can add both addresses there. But of course, if it's the same, you need to ensure it is translated accordingly and that the safety assessor qualifications are recognized by both parties.
Thank you, Francesca. And one more from Adrian, who's asked, can a UK RP keep the English language PIF in the EU as long as the UK RP has immediate access to the PIF?
Yeah, sorry, I got a bit lost with the question because it was a bit long, but basically the PIF, the product information file, has to be translated in English when it sits under the UK RP. Whereas when it sits under the EU RP, it depends on where your EU RP is located, because some member states may accept English, whereas some other member states, they want the PIF to be translated in their local language, or at least part of the product information file. I don't know if this answers the question because it was a bit long.
I think it does, but if there's any more information we need to pass on, then we can take that offline afterwards. So I'm just going to close the poll now and share the results. And so we have 43% are working on it, 41% have the EU RP, and then everyone else, 15%, has set up a UK RP. So I'm just going to close that poll and then hand over to Kevin for your presentation.
So good afternoon, everybody. It's a pleasure to be able to present today, and we're going to go through a number of factors looking at the impacts on the cosmetic and personal care products post-transition period from the 1st of January next year. So if we can have a next slide, please. So what we're going to look at today is looking at the list of contents. We'll focus on import and export trade impacts post-transition period with the EU, with the rest of the world, and also we will cover Northern Ireland as well, and some of the specifics that apply with regard to Northern Ireland. We'll look at customs and border procedures. We'll look at treatment of tariffs if they apply and VAT, and also cover some other aspects such as, for example, around terms of trade, Incoterms, and rules of origin as well, which is also important in terms of treatment of origin for customs purposes, which also impacts tariffs as well. If we can have the next slide, please. So some of the basic principles, which I think we've covered today, is that from the 31st December, 11 p.m. In the evening, after decades of trading with a single market, within a single market and customs union, there will be differences. And a lot of these changes will apply irrespective of a trade deal between the UK and the EU. Now, a trade deal, if it happens, may result in zero tariffs, but in some respects that could be, if you like, the best case scenario. So tariffs would apply clearly if there's no trade deal, and that could have big impacts. But the likes of customs declarations and, as I'll refer to, safety and security declarations will be required whatever happens. So even if there's a trade deal. And it's not just about customs documentations or customs declarations or paperwork as it's referred to. There's a lot more that hangs off this that businesses must be aware of. So it's not just customs declarations per se. There's things that we'll refer to called declarant of records, which puts liability against the actual trader, which we'll look at. So the EU have advised that all these new procedures that I will refer to will take place after 11 p.m. on the 31st of December. The UK have introduced some phasing of import controls, which I'll refer to, but it only covers certain types of products, standard goods, again, which I'll talk about shortly. So if we can have the next slide, please. So let's now talk about trade classifications and tariffs. Next slide, please. So why are international trade classifications important? And first of all, what are trade classifications? So people use different terms. They might use commodity codes, classification codes, tariff codes, HS codes. HS codes, harmonized system codes, is what is in place at a world level. But we're going to refer to them as commodity codes. And it's essential that any business, when they're moving goods across borders, and bearing in mind from the 1st of January next year, or after 11 p.m. on the 31st of December, there will be two customs territories. There'll be a customs territory in Great Britain and a customs territory in the European Union. We'll talk about Northern Ireland separately as well. So commodity codes are required as part of customs declarations. So putting up commodity codes as being a really essential part of what businesses have to get to know. So they are essential in determining if any tariffs apply, and we'll look at some examples shortly. The VAT payable, whether any licenses are required, and we've talked about requirements for licenses to some extent today, and whether there are any import or export restrictions. So getting the commodity code right is essential. If you're not sure of the commodity code for your goods, you could consider a binding tariff information, a BTI, in which you get a customs decision on the correct commodity code, because businesses who get their commodity code incorrect are potentially subject to fines. And again, the impact of post-transition period trading is making a lot more visibility over what commodity codes are as part of customs declarations. So an essential part. If you are using a commodity code currently, which is in the other category for your commodity, your product, do look at that, because it may not be the correct code. If we could have the next slide, please. So let's look now at some tariffs that could apply. So again, to confirm, if there's no trade deal between the UK and the EU, tariffs will apply. And on UK imports, that will be the fairly recently announced UK global import tariff. On UK exports going into the European Union, that will be what we know currently as the EU common external tariff. Now, I'm very conscious for some products, such as beauty or makeup preparations, there's zero tariff apply. For other products, as we can see, like shaving preparations, personal deodorants, bath salts, and some products linked to soap, tariffs, however, do apply. The UK global import tariff is slightly less than the EU tariff. So in this simplification, there's been a lot of rounding down of percentages. But for every business that's impacted, if there are tariffs, that has an impact, whether it's 1, 2, 3, 4, 6%, 10%, 12%. Every percentage has an impact. So preparations do need to consider that, but also need to consider it from the perspective of the overseas counterparty, whether it's your customer overseas, because they will be impacted in most cases by the impact of these tariffs. So tariffs could have an impact if there is no trade deal. If we have a next slide, please. So what we'll do now is we'll look at customs procedures. So this becomes key and a key element of the changes, irrespective of whether there is a trade deal or not. So if we move to the next slide, please. So customs declarations from January 2021, goods moving between the UK and the EU, probably should say GB and EU, will move between different customs territories and will require declarations. So that will be, so there's two declarations. There's an outbound declaration, an export for goods leaving one customs territory, whether that's the UK or GB or the EU, and an inbound declaration for goods entering a customs territory, again, GB or the EU. So irrespective of who makes that customs declaration, the liability sits with the trader, the importer or exporter, and the Incoterms, as we're going to look at, the international commercial terms, determine the responsibility for that declaration. So there is a choice as to who makes that declaration, whether it's the exporter, the seller, the importer, the buyer. Yes, freight forwarders agents can make declarations on behalf of traders, but the ultimate liability in law is down to the trader, which is not just the declaration itself, it's a commodity code and all the different aspects that hang off the declaration, which we'll talk about. So we have a next slide, please. So this example of a trade journey through, in this case, in the image in the bottom right, through the port of Dover, and this is really what's going to change from the 1st of January. And it doesn't matter if the goods are going from GB to the Republic of Ireland or the rest of the EU. Republic of Ireland is part of the European Union. So in this instance, we have the goods available at the exporter's premises, and we have goods loaded onto lorry for the purpose, because that is a process. Those of you trading in the rest of the world, perhaps will trading with the rest of the world, will be more familiar with these processes. In this instance, the lorry moves from the exporter's premises to the port of dispatch. And if it's within the European Union, currently, there are no declarations required. From the 1st of January next year, declarations will be required and information has to be provided to customs authorities. I'm going to look at that specifically in the next slide. But goods required to clear customs through a permission to proceed. And then the goods obviously then move on, the vessel sails, whether that's Dover, Calais, Felixstowe, Rotterdam, for example, the vessel sails, but it again requires to clear customs at the port of arrival as well. And then you have the import stage with the goods effectively moving to the port, the lorry of destination. Now, later we are going to look at what some companies are doing, either through their freight forwarder or through their own initiatives, use of procedures like transit and use of custom simplifications, which we'll talk about as well, which really sort of reduce some of the impact of what is needed for two declarations, an exit customs declaration and an entry import declaration as well. So if we have the next slide, we can look at some specific impacts on what is going to change. So this is the export. So what is needed from the export territory, export country side? So if we go towards the second half of this slide, we can see a new and additional requirements needed. An export customs declaration is required. Exports require to be zero rated for VAT, so similar procedures for the rest of the world. And those of you familiar with Intrastat, that will still apply in 2021 for record keeping audit purposes at a national level. But we can also see here a requirement for a new safety and security declaration. When goods leave a customs territory and enter the European Union, for example, you need a safety and security exit declaration, which is normally provided or is provided by the haulier. Again, discussion is needed with a freight forwarder to make sure that that safety and security declaration is required. Currently, as we're still in a transition period, there is no requirement for the customs declaration or the safety and security declaration. That will change. There are, as we've looked at, requirements on labelling analysis and goods placed on the market. Origin certificates will likely be required, indicating the goods are of UK origin, for example. We'll talk more about that later. If you're moving goods temporarily, you will require a carnet. So if you're moving goods, for example, for an exhibition, photographic equipment, you will require a carnet for temporary exports, which is not required currently for the European Union, but it is required for rest of world trade. And the packaging, the wooden packaging, must be something called ISPM 15 compliant. Now, if you're using your own wooden packaging, you need to see if the ISPM kite mark is there, which basically indicates that the wooden packaging has been specially heat treated to stop the likes of beetles and other pests. So that becomes important as well, to make sure that the packaging is what's called ISPM 15, specially heat treated compliant. So suddenly we can see there's a lot of requirements here which move just beyond getting my forwarder or my agent to make a customs declaration on my behalf. So additional things that have to be considered here. If we move to the next slide, please. So this is looking at imports coming into the EU or GB, and this is, I guess, the other side of the coin, so to speak. So possible import tariffs if there's no UK-EU trade deal. Import customs declarations required. Again, compliance on labelling, packaging, goods placed on the market. Import VAT payable upon importation. So suddenly we're starting to see VAT come into play as well. We have a slide on VAT later in which I'll talk more about the VAT impacts. And you not only need an exit safety and security, you need an entry safety and security. And bear in mind here, we're talking about EU-GB. We'll come on to Northern Ireland shortly. So you need an entry safety and security declaration, and the packaging must be ISPM 15 compliant. Clearly, as we've talked about, there's specific implications such as REACH and other product compliance, regulatory compliance as well. If you're moving goods or importing goods that require a license, for example, dual-use goods that have both a military and a civilian purpose, you will need an open general export license for moving goods to the European Union as well. So again, that's something that needs to be considered. If we can have a next slide, please. So we're now going to talk about the UK border operating model. So I just want to spend some time talking about this, because certain sectors have specific requirements. We've not even mentioned CITES for endangered species yet. We will do on the next slide. So the UK border operating model was announced a little time ago, and all 206 pages of it. So it basically indicated that the goods that are defined as standard goods, and we'll look at examples of non-standard goods shortly, that UK businesses can use staged import controls. So basically that would allow import declarations, full declarations. You don't have to make them until 6 months after the date of importation, up to the 30th of June. So what that means is if you're importing goods, for example, on the 1st of April, you have 6 months in which you can make a full declaration, which would be the 1st of October. And by doing that, you can also defer the payment of import duty if there is any. And that's through a process which is called EIDR, an entry into declarant's records, which means that you can just keep all the records, but you need all the records. You need evidence you have all the records, such as the commercial invoice, packing lists, that you've got everything there. If you're audited, you're not just saying you're entering it into your records, you need it. And then what you would do when you make the full declaration is then you would have to apply for a process, if you do it yourself as a trader, called CFSP, Customs Freight Simplified Procedures, which is an authorization process. Now, those of you that are familiar with CFSP, and I appreciate some on the call will be, there will be new processes. The HMRC are looking at simplifying the process for applications for CFSP, but I'll talk more about that later. For some of you on the call, it might be what CFSP never dealt with that before, and I do understand that. And we have all these new processes which were starting to come out, which have generally only ever applied before for rest of the world trade. But it's important. Now, freight forwarders can do it for you. Obviously you'll be charged accordingly, but if you are going to speak to a freight forwarder or an agent intermediary, do speak to them now. Now, imports of controlled goods, and we'll look at examples of controlled goods, live animals and high-risk plants, will be subject to import controls from the 1st of January. They're not part of this three-stage process. That will require export certification, such as export health certificates, import pre-notification, so pre-notification that goods are being imported that are live animals, high-risk plants, products of animal origin, and that will be registration for a system called IPAFs, which is a new system that's being developed. Those of you familiar with traces, that is the EU system. And inspections have been indicated at the point of destination. Now, from the 1st of April, these procedures will apply for products of animal origin. And then from the 1st of July, we will have full import controls. Full customs declarations required, full safety and security declarations required, border inspection posts, increased number of inspections. So there is that phase in there, and businesses have to consider whether they do want to carry out this entry into declarant records process. They must have proper documentation, or their forwarder must do it on their behalf. And that could be linked to deferring the actual payment of the of import tariffs, if there are any. If we have a next slide, please. Just want to speak about controlled goods here, because in the border operating model, there is mention of what are controlled goods. So that could include excise goods, could include controlled drugs, and could include CITES as well. And there's specific requirements around CITES. So at the end of a transition period, CITES specimens will only be able to enter or exit the UK through specific and designated points of entry and exit. Permits will be required. I pulled out there that the border operating model, page 25 for imports, 136 for exports, are what you should look at in terms of specific requirements for CITES. If we have the next slide, please. So we've looked at GBEU, but now let's look wider at the responsibilities for customs declarations and documentation. As I've said, Incoterms, which we'll look at, some of you will be familiar with Incoterms. For some of you, it might be not really heard too much about what they are before. And certainly post-transition, post-Brexit, Incoterms are becoming known as a key element of how we trade. So with the declaration, we talked about responsibility for the correct commodity code. You need to declare the correct valuation and origin of the goods. So for any businesses that have intercompany trade and transfer pricing, correct valuation is needed, because it will be the value of the goods will be looked at for GBEU trade. The declarant of record, the responsibilities which we'll look at, VAT, and businesses must maintain full proof of export and import. This applies currently for trade with the rest of the world. It will apply for trade with the European Union going forward. And that means a full documentation file, because if not, businesses are liable for VAT and for fines if you don't have the full element. So in terms of evidence of customs declaration, the transport document. And bear in mind that if your supplier or your customer is doing all the transport work, all the declarations for you, you still need this documentation. If the forwarder's doing it for you, the parcel carrier's doing it for you, you must have this documentation. It's absolutely vital. Responsibility for licenses depends on who's making the declaration, the exporter or the importer, and the declarant is saying that the trade documentation is all present and correct as well. So as we can see, there's wider responsibilities. We will look at the grant scheme. So the government has put aside £50 million, initial £34 million has all been used up to actually support companies in understanding some of their requirements around customs declarations. If we have a next slide, please. So VAT, we've talked about this. So imports into the UK. So from the 1st of January, postponed VAT accounting will be available. And this will apply now for the rest of the world, not just for the European Union. So postponed VAT accounting will be available. I think it's the first time since the budget of 1993 that the postponed VAT accounting will apply. So effectively, you don't need to be authorized to use postponed VAT accounting. So that's good. But for imports into the EU, it's different. Import VAT will be payable upon importation. So EU importers will not be able to use the reverse charge mechanism, which they do currently. The only way they will be able to do that is to obtain a duty, a VAT deferment guarantee with the customs authority of the country, which normally has to be supported by a bank guarantee. So very, very important to consider the impacts there for the importer into the EU. Their cash flow could be impacted by having to pay the import VAT. Or they could try and put it back to you, the UK exporter, and they could say, you're responsible for everything. I want simplified trade as it is today. I want you to sell on what is called an Incoterm DDP, delivered duty paid. I'm going to look at the implications of that very shortly. If we have a next slide, please. So Incoterms, this is just, you'll have copies of these slides and a recording available to call out the different Incoterms that apply. Rather surprisingly, or maybe not for EU trade, we have 3 or 4 Incoterms are used in particular. The proverbial lorry turns up at the premises of the buyer, or the lorry turns up at the premises of the seller and drops off the goods. And we really, in most cases, we're looking at 4 Incoterms, which you'll look at: EXW, XWorks, FCA, effectively DAP, delivered at place, DDP, delivered duty paid. If you are using other Incoterms like the C terms, those are good Incoterms to use. And certainly for companies trading with the rest of the world, those sorts of Incoterms do apply a lot. So that's just an overview, and again, you can use the grant scheme to learn about Incoterms because these are essential in terms of your responsibilities. If we have a next slide, please. Now, in the context of Incoterms, we're very conscious that sometimes we have XWorks where the lorry collects the goods from the buyer's premises, so effectively the seller does all the work, or delivered duty paid where the goods are delivered directly to the buyer, where the maximum responsibility is, this example, on the UK exporter. And if you are selling under those terms, even if the forwarder or agent is making the declaration on your behalf, you need an EU EORI number, which is different from your UK EORI. You need an EU VAT number. And in some countries, an EU VAT number requires a fiscal representation as well. And you are the declarant of record. You may try and push towards DAP, delivered at place, where the import duties to VAT, the declarant of record, is your European buyer. But depending who you're selling to, you might not want that because they might not be in a position because of size or expertise to be able to do it. And likewise, any smaller UK exporters selling might not feel they really want to get involved in customs declarations. There are ways around this, but there's a lot of consideration needed, and a lot of don't just rely on the agent, the freight forwarder, because you have liabilities and responsibilities yourself. So we have the next slide, please. So just to summarize the importer declarant of record, because this is important, because a lot of UK businesses are either being forced to sell on DDP, deliver duty paid terms, to make sure they keep winning the business, or they're selling without possibly realizing the implications. You, the trader, not the freight forwarder, is responsible for that declaration, even if the forwarder is making it on your behalf. You must ensure that the goods are legitimate, correctly valued, and declared upon importation. You are responsible for import duty and VAT, the accuracy of the information, the authenticity of documents, and any obligations, licenses. So really key to sort of mention the importance of that point. But we do understand, we do recognize a lot of UK exporters are being put under a lot of pressure to keep the business, whether that's the Republic of Ireland or France or Germany, Austria, etc., to keep selling and sell on what will be DDP terms. So we do recognize that, but it's important that businesses equally recognize the impact of that. Could gain competitive advantage. So for those businesses prepared to take on responsibilities, train staff, take on certain obligations, it could give you a competitive advantage potentially as well. If we have the next slide, please. So making a customs declaration, as said, you can use an intermediary, a forwarder, an agent, a broker. In some cases that could work well, or you can make your own declarations potentially. But if you do that, you do need to consider the implication. Now, grants are available for both training, for both qualifications to learn about this, for software that's needed to interface with for GB trade, the current chief system, the customs clearance system, let's say, and also for recruitment as well, up to a certain level. So do look at the grant scheme. A lot of companies are accessing it. £50 million has already, £3.5 million has already been used up, and that's probably in 2 weeks since the announcement, possibly less. So a lot of companies are using the grant scheme because it's free. You might as well use it while you can. Don't just leave it to the multinationals, the big companies. Don't just leave it to the forwards and agent. Learn yourself as well. If we have the next slide, please. So Northern Ireland trade, we're gonna have another poll question for, but I'm very keen that we do cover Northern Ireland, not just for businesses who are based in Northern Ireland, but for anyone trading with Northern Ireland. So as we've sort of indicated, Northern Ireland remains aligned to EU rules, and the island of Ireland is part of the customs territory of the European Union, as well as Northern Ireland being part of UK customs territory. And there will be additional requirements for GB-NI trade. So for goods moved, there has been an announcement a couple of weeks ago about a new trader support service, and there will be further announcements in that respect that will support traders trading between GB and NI, for example, around customs procedures, noting that the trader support service there is there to try and support traders and support the whole community, the carriers, the hauliers, the forwarders as well, and work with that community. So just to confirm, for goods moving from GB-NI, an inbound customs declaration will be required because the goods are entering the customs territory of the European Union. There will also require to be an entry safety and security declaration as well, which would be made by the haulier. Goods at risk, deemed at risk moving from Northern Ireland to the Republic of Ireland, tariffs could apply or will apply. And a list of at-risk goods is still to be advised. Goods, for example, products of animal origin will be subject to SBS sanitary and phytosanitary checks. But let's just look at it the other way. What about NI to GB? Sorry, that should say NI to GB, not GB to NI. The concept of unfettered access is still very much referred to, but some of the NI command papers refer to the fact for NI to GB that goods subject to CITES and goods moving under duty suspension may require declarations. This is for goods coming from NI to GB, using those specific examples. So international conventions and CITES is the example provided. Trade between NI and RRI is frictionless as it is today. So no customs declarations, no tariffs. I think we have a poll in our next slide, so if we could move to the next slide, please.
Yes, yeah, absolutely correct. Thank you, Kevin. And as mentioned earlier, I've flipped the polls because I think it makes more sense to ask this one now. So the next poll is, have you reviewed and changed your supply chain arrangements for 1st of January 2021? And just back to Northern Ireland, Kevin, I mean, how is it going to work in terms of companies in Northern Ireland trading with the Republic of Ireland and the rest of Europe? You touched on it briefly, but a bit more information, please.
Yeah, no, thanks. It's a good question because, as I say, there are unique circumstances in Northern Ireland. Certainly, the integrated supply chains with the Republic Island are extremely important. So the Northern Ireland, as well as the UK customs territory, is still part of the customs territory. So as we say, goods moving from Northern Ireland to Republic of Ireland and vice versa, as long as they stay on the island of Ireland, no customs declarations required, no tariffs. If goods move from, say Belfast to Rotterdam, or move from Northern Ireland to the European Union, the rest of the European Union, again, no customs declarations, no tariffs. So again, the Northern Ireland is very much part of the European Union as part of the withdrawal agreement. So really, really important there, and Northern Ireland businesses have this unique position. But equally for GB to NI, there is the impact there because goods are moving from the customs territory of GB, rest of UK, to part of the customs territory of the European Union. Thank you.
Thank you, Kevin. And you also touched on the grant scheme earlier. So just wondering if you could say a bit more about what those grants can go towards and kind of what provide as well for training courses.
Yeah, so as I say, it's important that businesses, traders understand their obligations. For businesses trading with the rest of the world, you may already be familiar with those obligations, but EU trade or GB to EU trade or EU to GB trade, it's important now to learn those obligations. These obligations were in place before the UK joined the European Commission. But all these obligations, so whether it's around customs declarations, the moving of the goods, the trade documentation, the commercial invoice, the transport document, it's important that businesses understand their obligations, because ultimately in the eyes of the law, it's the trader, the importer, the exporter that is liable for everything that hangs off the customs declarations, the licenses, for example. So, but you can, if you're looking to make your own declarations, apply for grants for recruitment, and obviously training would be part of that recruitment and qualifications, and also for software as well. So if you're looking to make your own declarations, you can apply under the grant scheme. Thank you.
Thank you. And several of the courses provided by the Customs Academy are fundable by these grants as well, so that's worth bearing in mind. Just to show the results of the last poll, so 25% have already reviewed and changed supply chain arrangements, 46% planning to, 29% have not. Any surprises there, Kevin? You think it'd be higher?
I think it's interesting, and I think it is good. It probably indicates a good level of planning, a good level of preparation, which feeds into an earlier poll there in terms of some of the numbers. And planning and preparation is clearly important here, not just some customs declarations, but working with your customers and suppliers as well. So your customers, suppliers in the European Union will be impacted as well. So working with them becomes really, really important. Understanding the impacts there, and possibly by working and helping them, you might gain more business. We've seen examples of that, where a UK trader has been proactive and has gained more business through that proactivity and working. So communication, cooperation, collaboration is really important.
Thank you, and thank you everyone for answering the polls. But yeah, back to you, Kevin.
So again, I'm not going to try and get too technical here, partly because of time, but I just want to throw up some concepts here for businesses. Some of you may be aware of use of customs special procedures, which is around whether it's deferring duty if it applies in VAT, or in some cases eliminating upon re-exporting. So there are customs special procedures such as customs warehousing, inward processing that can apply, which is where goods go into a warehouse out of free circulation, and inward processing where goods are part of, for example, a manufacturing processing environment. So I just wanted to throw that up for businesses to consider. One of the drawbacks of these special procedures, there are benefits of it, is required a financial guarantee, a bank guarantee. HMRC have announced that some of those requirements of guarantees, including for duty deferment, where you defer import duty, for example, that you may not require a financial guarantee anymore unless you're a high-risk trader. So you have there's concerns over the financial viability of the business. There's a history of non-compliance and poor record keeping. Outside of that, the requirement financial guarantee may no longer be required. So again, we're happy to speak about these requirements more because more and more companies are looking to use these special procedures because they will apply for EU trade now, not just rest of world trade. And they are a way of introducing efficiency into your supply chains. If we have a next slide, please. So I've mentioned again, I'm not going to talk about it too much, customs freight simplified procedures, the importance of it there. So there has benefits in terms of importation, around bulking supplementary declarations, around the cash flow benefit as well. So again, because of time, I can't go into it too much, but again, if you want to find out more about it, more and more companies are looking at this as a solution for not having to make the full declaration upon importation. If we have a next slide, please. Okay, so I also wanted to mention transit. This could be done through your freight forwarder. Is that if you're moving goods from the European Union to Republic of Ireland using the land bridge of the United Kingdom, you can use the transit process, or your forwarder will help you use the transit process, which avoids the needs for declarations and for tariffs. And equally, if you're moving goods from Dover, Calais through to France, you can use transit process in this example in Germany. So speak to your freight forwarder, for example, about transit procedures. Some of your forwarders will already be doing this and looking at that as their solution, in some cases for avoiding full declarations in certain locations, and also avoiding the need for tariffs if it's moving, for example, from an EU through a non-EU country, which the United Kingdom will be, to another EU country, which, for example, the Republic of Ireland would be. So important to consider transit procedures, again, as a possible solution if you have goods moving in those directions. If we have a next slide, please. So post and parcels. So I'm conscious that small parcels still apply. And those of you, probably one of the easiest ways to put this is that rest of the world procedures will apply for trade with the European Union. Declarations are still required. Obviously, you can work with your parcel operator, but declarations are still required. Some parcel operators will submit a bulk customs declaration, but you still need evidence of that declaration for proof of export. So again, in certain cases, you'll work with your parcel operator, the Royal Mail, but just to flag up, post and parcels declarations will be required. If we have a next slide, please. So again, changes in procedures for goods not exceeding £135 around the VAT and treatment. This slide's available to you to look at, and again, because of time, we won't go into it in huge amounts of detail. But if you do have goods not exceeding £135, do look at this slide, please. Next slide, please. So again, just to throw up, some of you on this call may be authorized economic operators. This is, I don't like using the word trusted trader status, but there are benefits to becoming an authorized economic operator. I did do a check of cosmetics companies, for example, in Europe, and 10 cosmetic companies with that in their name are authorized economic operators. There are benefits. For those of you that have considered it, you're welcome to contact us further. Those of you research it, look at it. But the one thing I would say is there's a database. Again, we can provide you with information of a database on Europe. Is check whether your competitors are authorized economic operators in the EU. If they are, that may give them competitive advantage over you. So do look at the EU database. We can send a link out following the webinar today. Next slide, please. So further considerations, we'll very much wrap up now because I'm conscious we need to get more questions in. If so, we have a next slide, please. So as indicated earlier, we have the impact of trade with the rest of the world, and it's been talked about earlier. You've got the link to the government site there in terms of countries where continuity agreements have been signed. And the next slide, if we call that up, please, has countries where continuity agreements have still to be agreed. That includes Turkey as well. And the trade deal with Turkey technically cannot take place until the trade deal with the EU has taken place. And clearly we have lots of discussions taking place on Japan, United States, Australia and New Zealand, for example, which I know will impact companies here if those trade deals come to fruition. If we have a next slide, please. So one of the final points I'm going to mention is rules of origin. So rules of origin really can have an impact where you have complex supply chains. So just to say, in terms of UK-EU trade, there will be the rules of accumulation in terms of goods moving between the UK and the EU. So if there is a trade deal between the UK and the EU, the origin requirements will apply. So if it's a 50% UK origin for a cosmetics soap product, for example, 50% of that must be of UK content to apply for the EU trade deal. If the rest of it is of EU content sold back to the EU, you'll be okay, should be okay, I should say, because of rules of accumulation agreed within the trade deal. If, however, you're selling to another country like Japan, and let's say there is a trade deal, you have to meet the rules of UK content in that trade deal. And EU content may not be part of it, depending what is negotiated. Equally, if you are selling to the EU and your EU customer is onward selling, they have to meet the origin requirements of the UK trade deal. And if there's significant amounts of UK content that means that EU content can't be met, that could impact your sales. So do consider that. Next slide, please. So really, to wrap up, this is just a summary. There's lots of other summaries we can provide you as some of the things to consider. So for example, your UK customers and suppliers, are they importing and exporting? Is there a direct impact for you? Are they ready for post-transition period trading as well? If they're not, could that impact you in some way? Could that present opportunities for you to actually sell more there? And if we have the next and final slide, please. This is just a sort of template, a weekly planner that you could use. And I've just put in some examples there. We've not even talked about GDPR and data flows today, trademarks. These are all impacts, obviously, as well as the movement of goods. So these are just some examples, and so that you can use a sort of weekly activity planner. And last of all, for me, thank you very much for listening to me today. Thank you.
Thank you, Kevin. Thank you for another great presentation. And a few things Kevin mentioned at the end. There are topics we've broached in other webinars and will continue to do so in our general content about post-transition. But as noted, we do have a limited time for some questions. So first one I'm going to do, we've had loads of questions come in about RP, the responsible person. So I'm just going to group them together for Francesca and just ask, just to reiterate, kind of who is the RP and how do you set one up and what are the implications of post-transition?
Thank you, William. Yes, I've seen that there are a lot of questions about the responsible person. So we need to think that the responsible person has to be a legal entity. So if you are wanting to set up a responsible person, you need to set up a company. So you need to look at the cosmetics regulation side of being the RP, so someone who can ensure and be responsible for compliance of cosmetic products. But also, because you're setting up a company, you need to look at the local requirements and taxation requirements for actually setting up a company in a country. So this is something you need to think about. Certainly a responsible person cannot be like a postal box or something like that, because there has to be someone who can be contacted by competent authorities should there be any investigations or any issues with the product. And I think there were questions about the RP as well, in terms of where they should be located. So I think in that sense, of course, the UK RP has to be based in the UK, whereas from a European point of view, when you choose where to locate your new European responsible person, you need to think of translation requirements, how strict maybe competent authorities and enforcement authorities can be in that member states. Because sometimes the competent authorities for cosmetics also are competent authorities for medicines. So they might have a bit more of a stricter approach. But really you need to think about where it's more convenient for you to have the responsible person, and also how convenient it will be to install that relationship with the authorities. There were some questions about which member state. We cannot recommend which member state, but it is up to the company, to how the company is structured, to choose which member state can be placed, the RP. Some questions were actually focusing on Northern Ireland. So there are conversations within the UK government and the European Commission. So the European Commission will, of course, consider a responsible person based in Northern Ireland as an EU RP. And the UK government will also consider a responsible person based in Northern Ireland as a UK RP. So this is something that is confirmed in the law. And we have seen one of the latest statutory instruments amending the cosmetics regulation, actually going into the details of how things could work in Northern Ireland to match the requirements under the Northern Ireland Protocol.
Thank you, Francesca. And we had a few questions about the notification database. One from Marianne, which asked, is it going to be developed to accept the move of all notifications currently in the CPNP towards the UK portal?
Yes, so there will be a UK notification portal, and CTPA actually worked with the UK government in the development. So we've done testing with our members. So we've actually seen the database from the back end, let's say. So yes, the UK notification portal will support the XML files of the EU CPNP. So if you look into re-notifying under the UK notification portal once it's launched from 1st January 2021, what you can do in the meantime is to go into your EU CPNP account, and you have to manually download the XML file of each one of your notifications, because then the UK portal will support those XML files. So you will then have to manually upload into the UK database those files.
Thank you, Francesca. And a question for Kevin on origin. So how do we evidence percentage of UK content? That's from Sarah.
So the actual content will be through probably a new UK certificate of origin. So it will be down to the authorising parties for certificates of origin, which could be an accredited Chamber of Commerce, it could be HMRC themselves, that you can make your origin application. So you would just need to determine to them it's of UK origin. So if you would maybe need to provide evidence of purchases, for example, from the UK, raw materials from the UK as part of the process, and indicate that it's of UK origin. If you have a lot of EU origin in there, you would then have to obviously try and indicate the percentage level of EU origin. If it's up 90% EU origin, in theory, you've got a problem. But there is something within the rules of origin and a notice called last substantial transformation. So if you have made a transformation that, for example, changes the commodity code of the product through a production and manufacturing process, a cosmetic process, for example, you may be able to claim that it's UK origin because the real speciality of good, the transformation took place in the United Kingdom. So that becomes key. But if all the expertise took place in Germany and France, and then you sent it to the UK, and then you tried to send it on to Japan, if there's a trade deal, for example, it's going to be difficult under those circumstances to claim UK origin.
Thank you, Kevin. I'll do one last one for yourself. So we've had a few people asking about VAT. Darryl asks, how do you claim back import VAT from an EU country when shipping stock to the EU if your company is solely based in the UK?
Yeah, so if you're selling, then VAT, you would be selling under the DDP, delivered duty paid term. So you would need an EU EORI and an EU VAT number. And in some EU countries, France, Central Eastern Europe, for example, you would need a fiscal representative in the country there, and they would be financially liable for any obligations. So if you had to pay import VAT yourself, you may have to set up what's called a duty deferment account with the customs authority in the EU. So this obviously becomes quite a big impact. And then you would claim back through a VAT return with the EU authorities. Now, we have heard some stories that some EU authorities are not particularly quick in paying back the VAT. So it is very important to consider the VAT obligations there. So as I said, delivered duty paid DDP puts a lot more pressure on. There may be some instances in representatives, freight forwarders can help with use of their duty deferment account, but that I don't want to put all the pressure on the forwarders who do such an excellent job to actually say that everybody is going to do that for you. But ultimately, it's your obligation if you're selling under DDP for any import VAT, and that may in some countries require a fiscal representative. In Germany, it's optional, and I think we'll get more clarity. We are hearing some customs authorities want legal entities now in the European Union, so they have somebody that they can actually pin, if you like, the legal liability on.
Thank you, Kevin. And we are starting to overrun, in fact. So I think we're going to wrap up. Thank you once again to Kevin, Joanna, and Francesca for the presentations, and to the CTPA for partnering with us on today's webinar. I hope everyone has found it useful. And on the final slide, you will find details about how you can get in contact with the UK Customs Academy if you have any further questions or queries or are interested in our training provision. And please do let us know as well in the exit survey if you have any further suggestions for topics or for future webinars. I'll leave this slide open for a couple of seconds to give you a chance to note down anything, but from me, Kevin, Joanna, Francesca, goodbye for now and make sure to stay safe. So goodbye, everyone.
Thank you. Goodbye.
Goodbye.
Thank you.